Hello and welcome to Brokenomics. Now, in this episode, I want to try and cover a lot of different topics that I think do tie together under a sort of loose theme, but don't know what I'm going to call this episode yet, but I'll come back to it. But basically what I want to try and cover is the sort of the bigger pictures and the underlying themes that explain the trends that explains what's going on with the bigger picture at the moment. And I thought to myself, right, who do I know who knows about that? Well, it's me, isn't it? So I'm going to be doing this episode solo. First time I've done a solo episode in, I think, a couple of months now. The last one I did, what did I call it? I think I called it It's All About to Change. And in that episode, I talked about the coming liquidity upturn that I was foreseeing. And I went through the logic of, why that was. There's a whole bunch of logic that explains why I thought the trend was about to flip and start going positive. And I also showed you. In fact, that's a really good episode. If you haven't seen it yet and you're wondering if you want to watch another one, the liquidity one, It's All About to Change, is very good. And I said that you could also predict it by taking the purchasing manager's index information, which is basically whatever a purchasing manager is, people who work in big companies and buy stuff. Basically, there's an ISM. Which is a conglomeration of purchasing manager index that happen all over the world. Don't worry about this, but basically the point I was making is if you flip it upside down and shift it in time by 18 months, that you could basically see what's going to happen to liquidity. And I'll tell you in a bit how that prediction played out. No, actually, I'll tell you now. I nailed it. I got it exactly right. So basically, since the time of that video and now we have started to see an uptrend, quite a big uptrend actually in the liquidity, which is exactly what I said was going to happen. So that's very encouraging. So it's worth touching back on that and assets that will respond to it, because Bitcoin is the obvious one that responds very strongly to liquidity. I think we've got to touch on the state of the global American empire, because we are in most definitely a tumultuous time. It just feels like events have really speeded up. So I mean, if you're watching this in the future, I mean, we've had a failed Trump assassination, and I'll talk about how the markets responded to that. We've had basically a coup. It looks like Camila Harris just somehow became the nominee, and we really don't know how. At the time of recording, I have literally no idea if Joe Biden is dead or alive. Maybe by the time this comes out, because this takes a few days to edit, so you get to watch it a few days after the fact. But maybe you know if Joe Biden is alive or not. But I certainly don't at this moment. I assume that he's, on death's door. I mean, more so than he has been for the last 4 years. But I mean, like really, really close. So we find out if Camilla is president by the time you watch this. But yeah, the global American empire, it's not just Biden that's dying, it's the global American empire that's dying. And I do use that phrase specifically. It's not America that's dying. As I've said many times on this channel, America has a hell of a lot going for it. I mean, it's got commodities, it's got energy, lots of energy, it's got farmland, it's got secure borders, it's got good infrastructure, it's got an educated, motivated population, it's got high innovation rates, and yes, a few human capital factors are not going well. DEI is not resulting in the best. In the best. You need to make your peace with God every time you get on a Boeing airplane. So clearly there are some issues, but the root of America is good. So America is going to be fine long term, come what may, because I mean, you really need to be trying to screw it up, and there are people really trying to screw it up. But you get my point. It's that country is never going to do badly, but the global empire part of the American project that is dying. And that's dying because the people who particularly like that model of governance, they're coming up against trends that they can't deal with. and that's the mainstay of what I want to talk about this. So we talk about the market reaction, the liquidity that's happening, the Bitcoin response, and some other market response, and then we go into the dynamic that's playing out amongst the elites, which is going very badly at the moment for a certain sector of those, and then maybe we'll circle back to the Trump assassination and anything else that pops into my head between now and then. So liquidity is turned up. If you haven't watched the previous video, what's the short version of that is basically that assets are going to respond well to it. Liquidity is not just a function of money printing. That was obviously the key dynamic in 2020 and 2021 over that COVID period. There was a lot of money printing that led to a rise in liquidity, and assets responded. We had a hell of a bull market. Crypto really ripped. Bitcoin went way up. It is starting to happen again. It's not at this time being driven by money printing, at least not yet, although we come back onto how that could be a big factor. But this is something that I'm always focused on, because if you understand liquidity, basically you can make easy money. So, I mean, why wouldn't you? The absolute depth of global liquidity, well, not the absolute depth, but the relative depths in the past few years was actually more or less when I started this channel. And back then, Bitcoin was at something like 16K per Bitcoin. And so at the beginning of this channel, I talked about Bitcoin a lot, and I was basically begging people to take a serious look at this thing and to get some, because I know that Bitcoin responds so perfectly. I mean, better than any other asset. I mean, and I've looked. You can basically see how certain assets respond to liquidity, and they all do respond. Even going down the value chain. The tradable assets like Bitcoin and stocks respond very quickly to liquidity events. Down the line, I mean, everything, property, land, fine art, wine, all of those sort of things, they all, and even wages eventually take effect, but it takes effect at different speeds. And the one asset that responds very quickly is Bitcoin, shortly followed by other high alpha investable assets, so Nasdaq and those kind of things. You see the response much quicker than you do in, say, like property, or certainly in wages, and then prices in the shops are somewhere between property and wages. Well, actually, they're a lot ahead of wages, as you guys probably have noticed if you earn a wage. So so I was pushing Bitcoin as heavily as I could when this channel first started, and then as it started to rise, I kind of talked about it less, because I kind of felt that the obvious money had been made in that, and obviously Bitcoin was a much better buy at 16K than it is, in the higher 60s, which it is now. But I do think that it's the next few months. I mean, they just have to. It is going to respond to this liquidity injection. I think today BlackRock bought 500 millions worth of Bitcoin. They bought $500 billion of Bitcoin just today. So, I mean, obviously, it's kind of obvious that with that sort of buying pressure, it's going to respond. And there's lots of other liquidity waiting to flow in. Like I said, liquidity just doesn't have to be just money printing like it was in 2020 and 2021. I mean, it can come from a whole number of sources, and we talk about some of those. The corporate balance sheets, financial institutions will be holding money back. There'll be money held back, and this is what I want to come into in a moment. There'll be money held back, waiting for uncertainty to clear up. You've always heard that markets dislike uncertainty. Well, it looks like they now have certainty on the election result for a start, and I'll talk about that. But there's also the TGA, which is a huge factor. That is the Treasury General Account. So that's Janet Yellen's current account, basically. That got refilled recently, which led to a liquidity slump, which is why I made the video a couple of months ago. And that will start getting rolled out, as well as a bunch of other things I'm going to talk about in this video. That's going to get rolled out over the course of the election. notwithstanding the other things I'm going to say about turmoil in the elites, you would expect that to be used to try and give Camila Harris, if she is still the nominee in a few days when you watch this, but at the moment she is somehow, that will respond. But yeah, so that certainty. Why did that happen? So let's get on to the Trump assassination. I'll come back to my misgivings about the power plays going on in the background with that. For now, I'll just point out that the markets responded very strongly to the Trump assassination. And that was because the uncertainty discount, which you apply when you don't know who is going to be the next president, effectively dropped to zero. And I'm pretty sure it is this as opposed to some other externality, because Trump stocks basically responded well. What do I mean by Trump stocks? I mean, effectively, it was the S&P. The S&P went up, and the Nasdaq went down, and the S&P went up by the same amount that the Nasdaq went down. Why is that? That's because Trump is more aligned with sort of traditional industry type stuff. So, for example, in his recent RNC speech, he's against EV mandates, for example. I don't think that creates any sort of rift between him and Elon, because Elon is not pro-mandate either. But that's one example. He's much more traditional industry type stuff, and there's a higher proportion of that going on in the S&P 500, whereas the Nasdaq is more aligned with income and capital flows, subsidies, government contracts. I mean, it's a complicated picture, but essentially the S&P is more kind of Trump's deal, and so you could see that the money flowed in. So overall liquidity increased on that. The firms that were sitting on liquidity, the financial firms that were sitting on money, waiting to deploy it once they knew the outcome of the election, they basically just decided, yeah, this election is over, and therefore we are going to immediately deploy as if we have already decided that this is over. So that's a nice vote of confidence. Shame that poor guy in the crowd had to get shot for that, but yeah, we will come back to that a bit more. More broadly, Trump's set of policies tend to do very well for Bitcoin as well. Bitcoin was up something like 30 times under Trump. Bitcoin was up 2 times under Biden. That is a function of a number of things. It's also a function of how the Democrats are much more captured by, the Elizabeth Warren types, by traditional finance, traditional banking options. They haven't really got on board with this. Before I expand that thought, I suppose we ought to cover the other eventuality. What if, by some bizarre reason, that Camila Harris does actually win the presidency, which is obviously unlikely, but unlikely things happened at the last election, didn't they? So if she does, the thing you have to remember with Camila Harris is that she has absolutely no idea how the US economy works, or any economy for that matter. She has no idea how they work. And by that, I am not saying that she ascribes to a set of economic ideas that are false or socialist or communist, and therefore she's wrong. She just literally has no clue about any of this stuff at all. She doesn't even have bad ideas. She's that clueless. So if she comes in, you know what it's going to be like. It's going to be a whole bunch of just dreaming up social programs, vote buying ideas, things that will get her good headlines, and she just presumably think to herself, okay, well, we just make the rich pay their fair share, and spending will balloon under her, and she won't understand why the deficit, if she even understands what a deficit is, if she can tell the difference between a debt and a deficit, she just won't understand any of that. So if you go with Harris, there's no way out of it for the Treasury and the Fed other than printing lots of money, which will be bullish. And then the way that Trump works is also going to be rather bullish for Bitcoin. So I won't talk too much about Bitcoin, but let's just cover it while I'm here. Why is it that I think we're in an up-only situation with that at the moment? Well, Trump is pro self-custody. He's even talked about it being a strategic reserve asset. I've looked at the numbers on what would happen if you made Bitcoin a strategic reserve asset, and there's no scenario in which it is any less than like $250,000, which is obviously significant. Now, I don't know if he's going to do that, but he's talked about doing it. Trump is a low interest rate type guy. That will be good for all crypto and long duration assets. So let's just, I know I've covered this in previous episodes, but let's just recap what those are. So a long duration asset is, tech stocks would be a good example for this, because they are anything that has a series of cash flows stretched out into the future a long way, and they start to look significant. If you are a traditional type of stock, and I know I said just a moment ago that Trump's instincts are more with these people, but we're talking about interest rates, which are also part of his, and he just can't manifest that at the moment. But any asset which you've got that long stretch of incomes in the future, and tech stocks are like this because they're more about building something. You think of something like Amazon. It's queuing up. It doesn't. Well, it has started to now, but for a long time it didn't make great profits in any particular period because it was just winding up its potential to earn big cash flows in the future. So any stock that has a long series of future payments due to it at some future point, well, how do I value that today? I take what I expect those future series of cash flows to be, and I discount them by the interest rate. So if the interest rate comes down, what I'm doing is I'm discounting those future payments to a lesser extent than I would discount them under a high interest rate environment. So Trump is definitely a low interest rate type guy, and he will make that happen if he needs to change, and he will be able to change the Fed chairman. So long duration assets like tech stocks will respond well to that when that happens. Crypto will definitely respond well to that, again, for similar reasons. There may be an interest rate cut. In fact, there should be, actually. In fact, we should be into that cycle now, coming up to a presidential election, especially with Janet Yellen and, well, actually, I suppose Jerome Powell was a Republican. He was a Trump appointee, wasn't he? So whether he, I would imagine he's more establishment than anything else. Maybe he hates Joe Biden and he's holding back on the rate cuts for that. But whatever happens, when Trump comes in, you will get a number of interest rate cuts. So that's going to be positive for it as well. What else is going on? The big money is lining up behind it. So Mike Dell, he's been tweeting about, of Dell Computers, he's been tweeting about Bitcoin quite a bit. He's one of the 15 richest people in the world. The institutions are getting on board with it. Wells Fargo and Morgan Stanley, they're now getting in on it as well. So we already have BlackRock, Fidelity, two huge money managers who are obviously pushing their ETFs. But you now got Wells Fargo and Morgan Stanley who are enormous beasts as well. They've started selling it to their best clients, their ultra high net worth clients. Now, well, how does that work? If you've decided that something is a thing and it's going to do well, what do? Well, ideally, you want to buy your own pot first. In a regulated industry, it's difficult to get away with that without at the same time selling it to your clients. So what do? Well, you start selling it to your clients, but only your best ones. And actually, those are the ones that you want to do the best for, because if they move, they take a lot of assets under management, AUM, out with them. So those firms are selling it to their very best ultra high net worth clients right now. What happens next? Well, once those guys have filled their bags, once the all the employees of those banks, those financial institutions who want to fill their bags, they will do it as well. And then they just start pushing it down the value chain. Then they start recommending it to their high net worth clients and then their retail clients. Maybe by the time they get down to their retail clients, we'll be in a different situation and liquidity will be contracting. But I mean, it's kind of obvious, isn't it, where they're going to go with this. US corporates, big source of liquidity coming forward. They've got a record 4.1 trillion in basically cash reserves. Record amount of money. I mean, that's partly because of the reduction in the value of the money itself. So debasement, effectively. So because of debasement, there is just more money. Incidentally, I'll quickly cover, that's why you see these headlines every so often about how climate change is getting really bad because the dollar value of insurance payouts is going up. Well, maybe the weather isn't changing at all, and all that's happening is the money is being debased, and therefore the dollar value of claims would go up as a function of debasement. Nothing to do with climate change whatsoever. So, but yeah, same function, regardless of how we got into this situation. 4.1 trillion in cash on reserve with US corporates is a big number. The money is being debased. So if they keep it in cash, basically they just lose it, but slowly. If they put it in bonds, they could put it in US bonds, but basically the value of those is being eroded, clearly and obviously. We can all see it. So what are they going to do with it? If they take even a small proportion of that money and put it into something other than bonds or cash, it's only going to be gold or Bitcoin, isn't it? I mean, there's only a small number of things that they could deploy that money to, but there is that a lot of liquidity out there. And the other thing I'd say, just while rounding off on this topic, is that if you look at the order book, so where traders are positioned in the market, whether they want to buy or sell, all of the liquidity is above at this point. There's just no liquidity below, and market makers, they're going to want to go after the liquidity wherever it is. So if the liquidity is above, that's where the price is going to go, because you can't be executing trades where there isn't liquidity, obviously. So the setup is one of the best I've seen. What else? Jamie Dimon and Larry Fink, as I mentioned, they're on board. So, what more do you need? I mean, liquidity is responding. All of that stuff that I've said is happening. I just think it's just such an obvious play at the moment, and I want to be somewhat cautious because you don't want to look silly or much worse, lose money. But I just do not see how I'm wrong on this stuff.
To watch the full video, please become a premium member at lotuseaters.com.